Good afternoon to all, and thank you for joining us in this, our last webcast on this series of 4 webcasts we have given on the basics of a value-added tax in Puerto Rico. My name is Maria de Los Angeles Rivera, and Javier Oyola, tax manager, is going to be with me today. These next slides, I always like to show them. We have them a couple of times already, just to keep in mind the process and the timing. I'm going to stop a little bit here because, as you all know, we are in the last month before the second phase of the changes introduced by Act 72 start, which are those that are going to start or being effective on October 1st of this year, and those are the taxation of the designated services and what used to be the B2B exempt services. Both will be now start to be subject to a 4% tax on October 1st. Yesterday, the Department of Treasury issued the Administrative Determination 1517. Is an 18 pages long document providing guidance on the taxation of the B2B services and the designated services. Today, we're not going to go into the details. Again, it's an 18 pages long document, but just to mention some of the things that are explained on this letter, they provide detailed explanation on what services are considered the B2B, which ones are designated services, and how these services will be taxed depending on who's receiving the services, if it's another business or if it's a consumer. In addition, they provide examples of how these 4% should be reflected in invoices and how this is going to interrelate with those instances where you incur expenses on behalf of your client and then you get reimbursed by your client on these expenses. Also, there are several examples on how this is going to work. Also, they provide an example on how to interact these new 4% tax on the services with the 7% tax of income tax that should be withheld on services by your client, which is a different tax. So this document, 1517, also provides some guidance and examples on how these two taxes will interact once you start charging the 4% on services. In our tax conference that is scheduled to take effect on September 23rd here in Puerto Rico, it's going to be a whole day of conference, and we plan to go into details of this Administrative Determination 1517 and provide more explanation and guidance on the same. Remember, this is for the changes that take effect October 1st. So today we're going to be talking a little bit about the implementation process of a VAT. What is it that it entails, and how can you prepare for this implementation? Today's agenda, we'll have a little introduction where we're going to review, in general terms, the items that we have covered in the previous 3 webcasts, just to bring you into an environment and to be able to tie in the process that we're going to be talking about with what you have already learned in the previous webcast. We will talk then about the corporate impact, the resources mix needed in order to achieve a successful implementation, and then how Kevane Grant Thornton can assist you in this process.
Well, before going into the implementation process, we are going to make a recap of the previous webcast in order to make sure that everybody gets a general understanding of why it is important to be prepared on time for the upcoming changes. In the webcast of August 12, we discussed the transactions subject to VAT and specifically talk about sale of taxable items, use, storage, or consumption of property or services, business-to-business services, designated professional services, and also services rendered by non-residents to a person in Puerto Rico. We also talk about the person responsible for the VAT in the introduction of taxable items, which is the person that introduced the articles to Puerto Rico. In non-retail sales, the seller acting as withholding agents will be responsible. And in a retail sale, the seller acting as a withholding agent will be responsible for the VAT to be deposited at the Puerto Rico Treasury Department. In the case of services rendered by a non-resident to a Puerto Rico resident, the responsible is the person that receives the service in Puerto Rico. And we also talk about the person that is responsible for the collection of the VAT, which is the one selling the taxable items, goods or services, except those that voluntarily are classify themselves as small merchants. And also discuss some examples directly addressed to specific industries. Now we're going to have an example that was previously discussed, but remember, this is a recap of the previous ones, so if you have any doubts, maybe we can clarify them here in this example. Here, the manufacturing plant imports raw material in the amount of $1.5 million in step 1, but also imports other taxable goods in the amount of $1.5 million and pays the VAT, which is $157,000. We have our VAT bucket in the middle of the slide, where you can find the $157,000. Now, on the second step of the manufacturing plant acquires locally $5 million of raw material, which is free of VAT, but also acquires $3 million in computers and other equipment, which is subject to the VAT. So based on their purchases, they paid $315,000 of VAT on the computers and other equipment. And also, they purchased professional services for which they paid $126,000 of VAT. Therefore, on step 2, the manufacturing plant paid two items that are also presented in the middle of the slide, and added to the VAT paid in the first step, they make a total of $588,000 of VAT paid by the manufacturing plant. The summary of the VAT paid by the manufacturing plant is in the middle of the slide. Then after that, the manufacturing plant exports some of the manufactured items. Those will be subject to a 0% VAT, and sells $14.5 million to local distributors and collects $1.5 million of VAT. So this is the moment in which the manufacturing plant takes the credit for the VAT paid on purchases against the VAT collected from clients, and deposit the difference of $924,000 with the Puerto Rico Treasury Department. Finally, and the third step, if the customer of the manufacturing plant exports the items, those will be subject to a 0% VAT, and depending on the goods or services sold to local distributors, will be able to credit the VAT paid to the manufacturing plant against the VAT collected from their customers.
In our second webcast, we talked about the accounting methods that are allowed to be used for the VAT purposes, and we spent most of our time there talking about the requirements of the fiscal invoice or the fiscal statement, as well as the debit and credit notes that need to be provided to your clients, to customers, for them to be able to credit the VAT paid on the transactions with you. This is basically, and we consider this kind of the heart of the process, the internal process in the business, for you to be able to combine all your transactions, get your own fiscal statements, and provide the fiscal statement to your clients in order for them to credit and for you to be able to take credit in your case. We went through some examples, and we showed you what a fiscal statement or a tax invoice should look like. And we provided one example and noticed that that one was missing a couple of the requirements under the Puerto Rico Treasury Department rules. Again, Puerto Rico Treasury Department has not issued guidance or regulations on this part. We expect them, to be working with them probably as soon as they end up with the implementation of the 4% in October 1st. But again, this is just to show you what should be included in the tax invoice or the fiscal statement. We also discussed the debit and credit notes and also provided you a sample of how one of these notes looks like. And again, we noticed that this one that we had provided was missing some of the requirements by Act 72 as to these documents. Again, these documents are like the heart for a business under the VAT system because these documents are going to be the evidence and the documentation needed to be able to credit the VAT on the inputs acquired in the business.
In the webcast of August 26, we discussed the types of certificates and waivers available for VAT purposes on Act 72, and started with the merchant registration certificate, which is a mandatory registration and needs to be obtained before starting operations. We also talk about the small merchants registration certificate, which is a voluntary registration for those merchants with a volume of business of less than $125,000, and allows the small merchant to acquire items free of VAT, but will not be able to claim any credits. And lastly, we talk about the eligible merchant certificate, which is a merchant with sales of $500,000 or more during the last 3 years, and that demonstrates to the Puerto Rico Treasury Department that 80% or more of its sales are at a zero rate VAT. Then we talk about the waivers available under Act 72. And the first one we discussed is the exemption certificate and zero rate for manufacturing plants. This is the certificate issued to a manufacturing plant which allows the import or local purchase of articles for manufacturing process free of VAT. We also talk about the certificate of exempt purchases, which allows the eligible person to purchase items free of VAT, and is only issued to the government, hospital units, bona fide farmers, and merchants dedicated to the tourism activity. In August 26, we also discussed the types of returns under the VAT and explained that they are pretty similar to what we currently have, and basically they are the declaration of imports filed each time an item is imported into Puerto Rico, and the VAT is paid at this time in order to obtain the release from the Puerto Rico Treasury. The second one that we have is the tax on imports monthly return, which needs to be filed the 10th day of the month after an import is declared. And the third one we have the VAT monthly return, which is to report your sales, collections, and credits, and is due on the 20th day of the month following the transactions, the taxable transactions. And we also have the small merchants annual informative return, which is an informative return required for the holders of a small merchant certificate that needs to be filed 60 days after the filing of the income tax return, including extensions. We also discussed the process to become a bonded importer and explained that the major benefit is a deferral of the VAT payment related to the imports.
So that summarizes the basic concepts related to a VAT and how it's been brought into Puerto Rico. Now we're going to be talking about how we get all these things together and in place in order to be compliant with the system and in order to avoid penalties and be able to obtain all the evidence we need, documents we need to be able to credit and take advantage of these credits. When a VAT is adopted or introduced into the economy, it's usually the sense of companies and businesses that it's a very fairly simple change, which, of course, after you going through all these webcasts, you know it's not that simple. And that it only impacts the people in finance or the people in accounting. Unfortunately, this is only a very small part of it. The introduction of a VAT and its implementation within a business will have a wide-ranging effect, and it's very important to realize that it's not just a tax issue, but it's a business issue. A VAT readiness project, or you can call it implementation process or implementation project, requires the attention and the buy-in of the key players in any business in order for it to be a successful implementation. It is critical to be compliant with the VAT rules and regulations, and a structured and well-planned approach will ensure you efficient implementation while making sure your business still goes on and complies with the actual requirements that are still in process. As with the sales and use tax, the penalties that are going to be imposed or could be imposed under the VAT system, which, by the way, were not included in Act 72. As of today, there are no penalties for not complying with the VAT rules, but there is a technical amendment bill that is going around. It's 1433, which was not approved in late June, but now it's been brought back to life, and that bill includes the sections for penalties. And as with the sales and use tax, these penalties are very steep. So it's not only a matter of being compliant to avoid these high penalties that will, cost your business money, but also being able to obtain all the documentation you need to be able to take advantage of all the credits you have right to. You cannot afford to lose credits because you don't have the documentation in place. As I mentioned before, the VAT is not just a tax issue. It's an issue that will permeate through all your business operation and will present a challenge as well as an opportunity to your business in order to, again, be compliant. It will affect some of your business functions more than others, but it will also impact your financials, including cash flow. All merchants, all businesses that are required to collect or pay the VAT must urgently begin to put the necessary internal systems and procedures in place and allocate the necessary resources, both human resources and financial resources, in place to be able to account for the VAT. Those persons or those key employees or roles that have an integral part to play should intensify their pre-implementation procedures and begin to put the necessary systems in place to position your business to be VAT ready. So one of the first steps that needs to be done is to determine the real impact of the VAT in order to be diligent in determining what changes need to be done in your processes or in your functions to be structured to ensure delivery in the tight time frame we have. Remember, this tax is supposed to become effective April 1st next year, the latest June 1st as it stands right now. So we don't have too much time to get ready for this. And in addition, to call in the appropriate expertise when the tax falls outside your area of knowledge. Here, the challenge is to identify and address all business issues during the VAT implementation process and minimize any disruption to the operations of the business. The business must go on, so you have to minimize the interruptions. Business owners and those with key positions should identify and analyze the impact of a VAT on their businesses, develop an implementation plan, estimate costs, and allocate the resources. As a consequence of this analysis and this project, you will probably adjust your business processes and structure, adopt or change systems, review arrangements and contracts with suppliers and customers, educate and train not only your staff, but also your suppliers and customers.
As Maria explained, we have an impact in the entire organization, from the executive level to the staff level, and it is very important to be prepared for these changes. The list included in the slide provides a generic view of the departments that will be impacted within the organization with the transition to the VAT. First, we have the accounting and finance departments, which will be issuing debit and credit notes. They need to deal with programming to get all the credits and available and many other stuff. We have the IT department, which will have to deal with all the necessary programming to make the correct collections of the VAT and to make sure that all the VAT paid is available for credits. We also have the human resources department, which will have to deal with professional service providers that are contracted by the company and many other items. We also have the legal department, which needs to review all the contracts and agreements that they have. And this also impacts the procurement and sales and marketing department, which will probably have adjusted budgets and more documentation requirements. The transition to the VAT also involves more than just a change in rate, and each taxpayer needs to focus on the following areas of interest when the transition comes into a reality. The first one is general awareness of all your employees. You need to also focus on the legal accountability of every transaction, the compliance with all the rules established by the Puerto Rico Treasury Department to avoid any penalties and to get the most of your credits, and several changes in the IT system, pricing, and operational changes. And following, you will find a table summarizing how the department should be involved in these changes.
This table just summarizes the departments, the major departments in your business that may be affected, and the level of involvement of each of these businesses in the process. As you can see, all the departments, accounting, finance, IT, human resources, legal, procurement, sales, and marketing, must have a general awareness as well as the general staff. Everybody must know basically what is the VAT and how it affects the business. Then, depending on the functions of each department, the other items of impact, the other areas of impact and the levels of impact will depend, again, on their functions. For example, as to legal accountability, the executive level management, as well as accounting, finance, and legal, will be the most involved in that area because that will have to do with their day-to-day operations. As to compliance, again, accounting, finance, IT, human resources, and legal are the departments responsible for ensuring compliance with the rules and regulations. As to IT changes, accounting, because they are the ones that execute whatever it's programmed, and of course the IT division or the IT department is the one that needs to do all the necessary programming and changes in your softwares, or acquire new software if the one you have will not be enough or render you compliant with the rules and regulations. Also, we need to talk about pricing changes, because due to the imposition of this VAT, and depending on whether you can credit or not the VAT that you pay on your inputs, there might be some pricing changes in your structure, so on your pricing structure. And who is going to be involved in this? With, of course, the executive level management, the IT department, again, dealing with the programming, and the sales and marketing people, the ones that, talk to the clients and make the sales. As to operational changes, again, you see that all the departments, including the general staff, will be impacted because of changes in the operations. It might be a change in the way expenses are reimbursed. It might be a change in whether a person is an independent contractor or an employee. It might be a change in providers, you name it. So all the departments will be impacted by operational changes as a result of the VAT implementation.
So what is needed in order to be ready for the change? Basically, an integration of several departments and someone that has the experience managing the project. Each taxpayer should have a project manager coordinating the transition. The accounting department needs to be integrated and aware of all the requirements of the other departments and the required changes. They need someone that can answer the questions that come during the implementation process. And the IT department has a very important role in the transition because of the requirements that need to be addressed in this process. So we will enter into each of these areas to discuss additional important facts.
Again, for the project to be successful and sorry for that. Going back. Talking about the resources, the mix of resources that will be needed as part of an implementation plan in order to arrive to a successful plan. Again, in Puerto Rico, we have a very limited amount of time to do this implementation. So at the beginning, your planning should be made in a way that will ensure you that you'll be able to achieve success at the end. The first component of your mix of your team will be the VAT consultants. Again, these will probably be persons, professionals outside your business, which will provide you technical assistance on the law, the regulations, and how to bring that is written in the law, in the paper, to the practical sense in your business. They are the ones that understand the legislation and what is it that the revenue authorities are looking for. They coordinate the due diligence process to ensure that the delivery team understands clearly your entire business and your entire organization, and also provide the technical leadership.
The second resource that you will have is the accounting department that needs to review the legislation and ensure that any complex accounting issues are addressed within the project lifecycle. And they should develop accounting based on VAT training. As mentioned before, the IT department has a very important role in the implementation plan because they have to provide the IT technical leadership, deal with all the requirements of the other departments, and make sure that everything runs smoothly during the implementation. They need to deal with the changes to the accounting software and also develop standardized user acceptance testing. If those testing procedures are not successful, then they will be required to make the necessary changes to make it work.
Lastly, your team will need a project manager. As every important project that you take in your business, in order to ensure success, you need a project manager. The project manager will provide both internal and external support to the project delivery, will document and communicate the steps required to implement the identified changes. This is like the roadmap the plan, how we're going to do this, track the project across the life cycle, and make any adjustments while the project is going on to cover any items that had not been considered at the planning process and take them into consideration during the implementation process. And also the project manager will assist the management in addressing risk to the project so they can be addressed before they become issues and the business might be subject to any penalties or lose credits. This is also seen as a great opportunity for businesses to review all their business processes and be able to make any adjustments, changes, or improvements to these processes in order to achieve more efficiency in your business. So a byproduct of this process might be a revamping of your processes and a reduction in inefficiencies that might be occurring during your day-to-day operations. Here at Kevane Thornton, with the support of our global network, we have extensive experience with VAT implementation processes and understand what is really important in this process. We will work together with you and our team of experts to develop your framework and the process that will best work for you. We have been working on these projects and frameworks here in Puerto Rico since February, when this VAT was first announced as a possibility of a change in our tax system. And we have researched and documented what needs to be done in order to achieve a successful implementation process.
So due to the time frame available for the changes to the VAT system, our implementation plan is divided in 3 major sections. The first one is the scoping analysis of the business. And here is where the awareness session with the key personnel is conducted, and also a meeting to identify key personnel who will be vested with tasks and responsibilities during the implementation plan, and also a better understanding of the business plans and process is obtained. Here we will identify the VAT impact to your business. And here is where the existing systems and IT capabilities are identified. The mapping of the supply chain, including suppliers and customers, is also made, and the identification of major types of supplies is made and classified between exempt and taxable items. The identification of major types of acquisition and ascertain that the input tax credits can be taken or not is also made in this section. And also it involves the discussion of potential impact of pricing of goods and services under the VAT system. In addition, we have a VAT impact study report that involves the documentation of the VAT issues identified by setting up impact areas, VAT implications, and recommendations. Here is where the summary of the impact study is presented. And lastly, in this section, we have the delivery of the impact and discussion of phase 2. It involves the discussion of all the things that were identified during the process of mapping your business, and involves the design of the implementation plan for phase 2.
Some of you may have already started on this scoping phase because probably you have done some homework to determine in a general sense how your business will be impacted by these changes. Anyway, it's very recommendable for a consultant, a VAT consultant, to review that initial assessment you have done and provide insurance and ensure you that you have considered all the items that needed to be considered in determining the impact of the VAT in your business. But that's only, one part of this scoping analysis, because once you have done your impact study and have identified your areas, major areas of impact, then you need to design your plan. design your implementation plan. And again, in that part, a VAT consultant will be able to assist you in doing that.
The section 2 of our VAT readiness plan is the implementation. Here you will find the area of VAT technical, which makes a review of the agreements and contracts to determine the VAT impact. We work with the in-house legal counsel to review and draft VAT clauses for agreements. We work with the coding of supplies and purchases according to the legislation. We highlight compliance requirements under the VAT and advise on transitional issues. We also provide a high-level review and comments in relation to the implementation plan. We have an area of VAT training, which is to provide advice and technical support to the employees, to provide technical support and training to your IT group, and assistance with internal inquiries, and provide regular update sessions with the key personnel. And lastly, in this section, we have the area of all business process change and review. Here, we prepare a detailed review of documentation and changes to your system processes, and system user acceptance tests are conducted and advise on any impact to existing HR policies. We also advise on legislative requirements in relation to post-VAT pricing and deliver a tailored VAT technical manual.
This, as you can imagine, this phase is the longest phase of the 3 phases. It's the one that's going to take more time because it's where all the necessary changes and adjustments to the processes and documentation that you have in your business are done. Depending on the complexity of your business, depending on the different line of products or businesses you have, this might take more or less time to complete. But again, it's the phase where the map that has been traced on the scoping phase is used through all the different departments and cycles in your business, again, in order to ensure that you, at the end, can produce a compliant return along with all the documentation that needs to be provided.
And the last of the 3 sections of our implementation project is the post-implementation area. It involves a compliance review, the review of issues that need to be resolved before the filing of the first VAT return, meetings to discuss issues identified and develop VAT compliance process and improvements, development of testing methodology and checklists to assist with testing sample transactions in respect to supplies and acquisitions. And also we have a post-implementation review, which is to discuss post-VAT implementation issues identified by key personnel and review the effectiveness of reporting and IT processes.
Again, this last phase would be a short phase when we compare it with the first 2, but it's also very important because here we're going to, it's determined whether what has been done in the scoping and implementation phases produces the right documentation and provides us the right result on the return. You can imagine in a VAT environment, the amount of transactions and the amount of documentation that needs to be handled, it can be mind-boggling. So your systems and your processes must support this environment in order for you to be able to do it efficiently and at the less cost possible, administrative cost possible for you, and of course ensuring the maximization of the credits and the minimization or elimination of any possible penalties that might be imposed. So that resumes what we call our VAT framework, and again, for Puerto Rico purposes, we had to adjust this framework to a 3-phase framework. In other countries where more time was given to implement a VAT in an economy, we might see 4, 5, or 6 phases depending on the time available. For example, in Malaysia, where they went live with the VAT April this year, they had 3 years to get ready for the VAT. So a VAT framework or implementation framework there was usually a 4-phase or 5-phase process. They had more time. We don't have that much time. What we have concluded here since February, that we have been studying these procedures and process, that in Puerto Rico, for an average business, the implementation project will take from 3 to 4 months to complete. And again, depending on the complexity and the different line of businesses that you might have. The more line of businesses in the organization, the more complex the implementation will be. Remember, the effectiveness date as of today, no changes yet, is April 1st, with a possible extension of 60 days that will take this to June 1st next year. So our assessment is that for businesses to be compliant and ready to be able to comply with the new system, you must be ready no later than March 2016. That means that you must start now to analyze the impact of this new VAT system in your business and take action. This slide that I present to you, I try to do a timeline of what we understand as of today, and with the amount of time that we have available to get ready. What a VAT project would look like in Puerto Rico. As you see, I label September 2015. Today is the 2nd of September, as the awareness and proposal phase. And we're doing that right now. We're taking this webcast, this basic concept webcast, becoming aware of what is it, what entails, and getting ready to ask for proposals for these services or determine who is going to do what in your organization. From October to November, implementation phase 1 should be running. That's the scoping analysis of the process. No later than November 2015, you should be already set with a plan to implement the system. That will give us from November to January or February next year to run the second phase, which is the longest phase. There we are counting for between 2 and 3 months to do this process, this phase 2. That will take you to February next year. And then to run the implementation phase 3, which is the compliance review and the post-implementation, no later than March of next year. That will get us ready for April 1st. We will have some more time if the date is moved forward to June 1st, but as of today, the date is April 1st. So time is running very fast on us, and we understand that right now, this month of September is all about the 4% on October 1st, but we need to get ready and start thinking about this VAT implementation.
Please remember that this is a very complex system that is more complex than the sales and use tax system that we currently have. And it is very important to point out that when the sales and use tax came in effect in 2006, the implementation process was very, very, very complex. So seeing that this system is more complex than the sales and use tax, we encourage you to be ready as soon as possible in order to be ready for the VAT system. The VAT system is already approved by the government in Act 72, and it's something that nobody is talking about, but it's currently in the law. So you need to make sure that everything you're prepared for April 1st, 2016.
One concern that some of our clients have expressed is that there are no guidance from Treasury Department on how they're going to implement this? And the answer is yes. There is no guidance. They just yesterday came out with the guidance on the 4%. So they haven't worked with the VAT guidance. But that's one part of the whole process. You can start looking for the impact. You can start doing your mapping. You can start doing your analysis of contracts and processes. And once the guidance from Treasury as to how this is going to operate, meaning how the fiscal statements are going to be transmitted, how they're going to print it, they're going to be by electronic means, that can be, done further down the road. But the first phases, the scoping and the analysis can be started because we have the law and we have what's in there, and we have the experience of all other countries that have implemented a VAT system. So again, time is running out on us, and we are feeling now for the October 1st issue of the 4%. Somebody had hit the panic button, and everybody is kind of on a panic mode as to how this 4% is going to impact them and how they should collect or not collect the 4%. Again, we cannot wait for the VAT until March next year to start thinking about how this affects my business and what do I have to do. Again, this will entail a commitment of both human resources and financial resources that need to be budgeted and set aside to be able to do this. If this is not done, the price is too steep to pay. The price would be not being compliant with the rules, probably subject to steep penalties, and the worst of all, losing credits. So it's a very high, steep price to pay for not being ready. We want to show you who is our team here in Kevane, Grand Thornton, that will be working and is working with this process, with the VAT process and the sales and use tax issues. We call ourselves the EVA team. And the first one there is myself, Maria Dos Angeles Rivera. You have been hearing me for the last 4 weeks, so now you have a picture. I'm head of tax here in Puerto Rico and IBC director. Mr. Robert D. Clark from the Tampa office of our member firm in U.S. is also going to be part of our team. He's a principal specialized in state and local tax services. He's been involved also in VAT implementations of his clients that do business in Europe, and therefore has a great deal of knowledge on VAT. We are going to be also being assisted by Mr. Adam Brashke, who is also from the Tampa office, and he's a senior tax manager, again, with extensive experience in this area. From our office here, we have Javier, who has been talking to you for the last 4 weeks also. He is a tax manager here in our office that has been working with EVU and EVA only, I guess, for the last year, doing nothing else but that. So he's been gaining a lot of experience. And also we are assisted by Raul Robles, who is one of our tax seniors here in the office, who has also been working exclusively with EVU and EVA for the last year. So you can have the confidence that the team that will be working with you has extensive knowledge and experience in this area. The last thing I wanted to talk about is, and this is a page from LinkedIn, probably all of you or the majority of you have a LinkedIn profile. I usually blog on LinkedIn, and for the last couple of months, more than a couple of months, probably for the last 6 months, have been blogging on the different changes that has been approved in Puerto Rico and how businesses can get ready for that. The last one I published was last week, while we were getting ready to receive Erica before she decided not to come. And I compare the process of getting ready, both for the changes in the sales and use tax and the VAT, to these storms. The category of the storm you're going to face will depend on how you prepare for the storm. The sooner you prepare for the storm, you might face a Category 1 hurricane. Because, again, we cannot hide the reality that it's a very complex process. But the sooner you prepare for it, the sooner you get assistance, the sooner you start planning, the smaller the hurricane you're going to face. As time passes, as time gets close to April 1st, the strength of that hurricane is going to be increasing all the way to a Category 5 hurricane. And we all know here in Puerto Rico, and those of you that are in the U.S. and know about the tropical weather, a hurricane Category 5 is really a disaster. So you don't want to be facing a disaster when times come and you're faced with the procedures that you need to follow. So again, we recommend and strongly suggest all of you to start thinking about this. Start during September, providing and getting your assessments and estimates so you can plan for the next month and be able to get through a not easy transition, but a more smooth transition to the VAT system. With that, we want to thank you, all of you, for attending this webcast series. We hope we have provided information, basic information for you to bring awareness to all of you as to what is it that a change of this category entails, and how here in Kevane Grant Thornton, with the assistance of our Grant Thornton member firms, can surely help you arrive to a safe transition and compliance. We have a question here in the chat. The question is, if we are not required to collect the VAT from our customer, but we have to pay VAT to our suppliers, can we take a credit or refund for the VAT paid? The answer is, as any other tax question, depends. It depends on what you sell, who are your customers, and who your suppliers are. For example, as we mentioned in our previous webcast, if what you sell is an exempt service or an exempt product, of course you are not going to be collecting the VAT. You will be paying VAT because you are not exempt. Your business is not exempt, so you might be paying VAT on services, equipment you buy that is not exempt, etc. In general terms, if what you sell is exempt, you cannot credit. The law, Act 72, provides certain exemptions to that rule, and it basically applies to those merchants that are substantially engaged in the sale of food and food ingredients, medical medicines, prescription medicines, and those that sell equipment used to help assist any deficiencies, physical deficiencies and stuff. And also covers the distributors and dealers of cars or motor vehicles are subject to the excise tax. So if you are one of those entities which you sell things that are items that are exempt, you'll be able to credit if you comply with the requirement of substantially being engaged. Also, if you sell items that are sold at zero rate, like for example, you sell to manufacturing plants or you sell services or items for export, you are also going to be able to credit. All the other items that are exempt, like for example, insurance premiums, services provided by banks, and other exempt services, then you will not be able to credit the VAT you paid on your inputs. So that's that's it basically for today. There are no more questions in our chat. Again, we hope we have provided you enough information to provide you a basic awareness of a VAT. We understand it's a very complex system, very new for us in Puerto Rico and for you guys in the U.S. that have not had experience outside the U.S. And it's going to be a process of a learning process and a process of getting used to the system. Here at Kevane, we remain at your services. Again, you can follow me in LinkedIn. You can find me, Maria de los Ángeles Rivera. And also, be sure to follow our publications, and I show them to you. We issue a mailbag every month with important information, not only tax, but also related to audit, outsourcing, accounting, and advisory issues. We have our website where we put a lot of our communications. All of our communications are there. You can find them there. And also we have the app. We have an application that can be downloaded free to your iPad, your iPhone, your Android. And there you can also receive all our alerts. We'll keep publishing these alerts. We'll keep blogging in LinkedIn to keep you all up to date. Remember our conference on September 23rd. We'll go deeper on the VAT. We'll discuss the changes to the 4% as explained on the Administrative Determination 1517. And most importantly, we're going to have tables, discussion tables by industry. So you can bring your questions related specifically to your industry, and we'll make the most to help you and assist you answer your question. So again, thank you so much for joining us, and have a good day.